Google has certainly been on quite the tear in the last 6 months, and it seems that the media narrative has shifted once again, as you may have noticed, from Nvidia being the only AI play out there to maybe there are some other companies that could be invested in for the AI race.
Fancy that. Google AI is actually a pretty good thing, apparently. Gemini 3 is out. Google TPUs are performing very well. Everyone has figured out that a lot of these Google consumer-facing AI products are actually trained and operated by those TPUs. Apparently, even Meta wants to use Google TPUs. Who knew?
So is this the death of Nvidia, the rise of Google? Let's talk about it. It's important to remember that Google AI has actually always been a thing. This is not a new development in the last 6 months, and it's certainly not a new development with the advent of Gemini 3. This narrative on Google and Nvidia and you name it, AI in general, flip-flopping between companies and industries is really what leads to absolutely disastrous sell low and buy high decisions. So don't fall for it. Throughout the debate on Google's relevance in the AI era, GAAP per share profit growth continued to handily beat the market by a wide margin, 28% CAGR since 2020, including on free cash flow per share, which is lower at the moment due to the elevated capital expenditure in support of AI data centers.
Yeah, almost 19% free cash flow per share CAGR. Still not bad, considering that we are somewhere in the midst of a very, very heavy AI data center CapEx cycle. This chart that we showed you here showing GAAP earnings per share and free cash flow per share brought to you by the sponsor of today's video, Fiscal.ai, who is having a Black Friday sale, 30% off any paid plan right now. So if you want to make great financial visuals like this one and do deep research into the companies you're interested in investing in, Fiscal.ai is a great platform that's got all your bases covered that you might need for your analysis.
That 30% off is only good until Monday, December 1st with our unique code. So check it out. Link in the description below or here on the screen. Fiscal.ai/CSI. So if Google's AI dominance is not the reason that the stock has doubled since April, what is the underlying reason? What's going on behind the scenes?
To be clear, perhaps competition with OpenAI could explain some of the depressed stock price 6 months-ish ago. But unbeknownst to a lot of investors, that antitrust case that was taking place against Google, it actually wasn't just one case. It's actually two separate but related antitrust cases. One regarding Google search and the other one regarding Google ads. So we kind of superimposed a little timeline of events here on top of this stock chart from Fiscal.ai, outlining some of the things that got settled in the last year. And as the fogginess on the future of Google cleared, then investors got more comfortable with the future ability of Google to generate profit in this era of AI that requires, as Nvidia has been talking about for years now, full stack compute, from chip design to operating infrastructure, building out infrastructure to the software itself. Google's always had those pieces in place. But there was this big risk that perhaps on the Google search side, they might have to divest Chrome, the web browser business, also possibly Android, the mobile operating system. And on the Google ad side, potential that they might have to sell off or divest their ad exchange. All of this core to Google search-based advertising revenue, which is what's fueling their research and development into AI. But it looks like while prosecutors did land some wins against Google, we are in now what's called remediation phase. Google's appealing some of the judgments against it. In both cases, it looks like the request for Google to have to divest key parts of its business is not going to happen. And you can see the latest big news right there in early September on the Google search part. the ruling that Chrome and Android not needing to get divested is really where the stock went, like really, really more up than up and to the right in the last couple of months. This is the real reason Google has taken off. And some of this more recent narrative that Google TPUs are suddenly competing with Nvidia GPUs, well, like you said, this is flip-flopping of the narrative. It's not exactly what's happening. We did a video on XPUs, which Google's TPU is a custom design accelerator, versus the GPU. Check that video out. And later this week, we'll have an update out for you on that ahead of Marvell and Broadcom earnings in early December.
One of the key investment risks that have been brought up recently is hyperscaler CapEx spending. And Google has been spending gobs of money on GPUs and no doubt as well on TPUs. And they're either using those for their own compute or possibly renting some of that out. We feel confident that Google knows exactly what it's doing and is doing the right thing with that CapEx spending. But now let's take a look at operating expenses. And one of the metrics that we're going to take a look at here with this fall is their research and development expenses.
Yeah, this is trailing 12-month revenue that you're looking at, the last two bars on the right through Q3 2025. Pretty wild numbers here, over 385 billion in revenue over the last trailing 12-month period. And also pretty wild, nearly 56 billion in trailing 12-month research and development. That includes a lot of stuff, including Google's other bets like Waymo, DeepMind, which does a lot of research, cutting edge research in Google AI, a lot of stuff going on under the hood here. Google, one of the biggest R&D organizations on the planet, are they getting good payoff for that research and development expense? We can keep this actually quite simple here without going deep into different return on investment metrics. What you can deduce from this here, though, is over the last 5 years, Google revenue CAGR at 16% far exceeds the growth of the R&D budget at 14%. That would be one indicator that Alphabet doing R&D work into AI is actually a pretty good investment. It's money well spent.
And as we showed you before in this chart, the GAAP earnings per share and free cash flow per share CAGR for the diluted earnings per share 28% and free cash flow per share CAGR of 19%. I would say not bad.
Whenever you see these per share profit metrics increasing far in excess of revenue growth, that's a great sign that the company is getting positive operating leverage. They're investing in projects that are rewarding shareholders. Good stuff. We know the CapEx debate still pending. I guess we'll wait and see how that pans out. But Casey said, money well spent so far. And you might just mention the fact that other hyperscalers want those TPUs might be a good sign as well.
Our viewers are probably wondering whether or not Google stock is a buy right now. And we can't answer that question for you. We are not ones to chase the stock, but this is one of the reasons that we've talked about having a sort of soft hedge against Nvidia. Other companies involved in this AI infrastructure build out, and Google is one of them, along with Meta, Amazon, some of the other hyperscalers.
And don't forget some of the chip stocks. Broadcom, it seems, has emerged as everyone's favorite winner from the Google TPU build out. No surprise to semi insiders. We've been talking about that for a few years now. Marvell reports next week. Over on Semi Insider, we'll have a research report, a write-up on that. And we'll talk on a different video later this week about the difference between custom silicon XPUs and GPUs one more time, just because it seems like the media still hasn't figured this out. So we'll just keep talking about it.
And what about in markets? Let's talk about some software companies in an upcoming episode. And if you haven't watched it yet, I'm going to link a video right here regarding the first time we mentioned a soft hedge for Nvidia. check it out. And make sure you visit chipstockinvestor.com, where you can get access to our new research platform. See you over there.